Good morning. It's Friday, January 5th. It's Jobs Day. It is Jobs Day. It is also a day where Friday, so got the time off. Your boy is not a man. Your boy has no brave heart. If there were like a superhero movie, I would be the guy getting killed probably in the first 5 minutes. I got out of SQQQ. I'll go into that a little bit. But I have no bravery whatsoever. There is no, let's go. Mel Gibson, Braveheart, that wasn't me. I'd be, turning the other way on my horse, riding away. But just so you guys are aware, I am doing a paid newsletter tomorrow. It will be about terms in education. I'm going to start an educational kind of section on here that will be paid. It will be part of the paid newsletter. But what I'm trying to do is put together the terms that I personally use to try and help you understand what I'm saying when I'm saying it. And so I'd like you to comment if you've heard me say something other than douche, because you hear me say douche all the time. But if you hear me say something other than douche and you want an explanation, just comment either on the newsletter. You can email me, any of the socials, go on to, Linktree. The link is down below, linktr.ee/dailystockpick. You can message me on Facebook. You can message me on X, Twitter, Vala's face, whatever you want. Instagram, YouTube, message me anywhere, even on the newsletter. You can just comment on the newsletter after you get it. So far, I've got 9 of them. I've got confirmation. Well, I've got 10 of them because there is a golden cross and golden and death cross. So that's the 10th one. But it's confirmation, MACD, algorithm, button hook, cross up, cross down, RSI, Bollinger Bands, levered ETF, PE, and golden cross stuff. So if you have any suggestions, let me know. Again, it's for the paid customers. So even if you're not a paid customer, if you're thinking of a paid customer and you want an explanation, my suggestion, let me know what it is. Once I write it, start a free 7-day trial and you can get the explanation for you. Again, I'm going to try and not just have the paid section, but I'm going to have an education section. So the education section is going to be significantly more something that isn't time sensitive. The paid articles over the past 6 months, while they have been educational and they've been reasons, and I think they've helped everybody, and we were having a good discussion on YouTube about how I'm the cheapest of the gurus out there per se. But I'll put in some stuff into that, and we'll look at it. So that'll be good. Now back to my shrinking head story where I just hang my head in shame. I sold out of SQQQ, and I put it in the newsletter yesterday because I got off the podcast at about 9:30, 10 o'clock, and I opened up Active Trader Pro. I was in the process of opening up Webull to try and look at that stuff to see if there was anything that I wanted to trade. I love Webull. By the way, if you're not in Webull, go over and sign to the Linktree and sign up for Webull. I love their app. But I was looking at Active Trader Pro, and this is what I saw. And I have the same setup on Active Trader Pro that I do on TrendSpider. My moving averages are there. The Bollinger Bands are there. I saw this shrink, and I said, I bought in at 1450. I don't want to get out where the market comes rebounding back. I said this on YouTube, and I'll say it here. I do think when this market comes back, we have one of those Tom Lee face-ripping rallies in the short term where it just bounces back, 2-3% in the other direction. I didn't want a triple levered short ETF in my portfolio for that time. So I wound up getting out. That is why, and if we look at that SQQQ, if I go over here, we can see we still don't have confirmation on QQQ. We still don't have in the algorithm a reason to buy QQQ. There is no support there. And here's SQQQ. This is one of my points. When you look at a 5-minute chart, like this Active Trader Pro is, that's a 5-minute. Each candle's a 5-minute candle, and you go back to the 4-hour. Understand. I was scared. I knew, and I said this on the podcast yesterday, I didn't want to hold over the weekend. I don't like, it's hard for a bull like me, a 30-year bull who always looks at the upside, to all of a sudden turn into a bear. And so short levered ETFs are a way for me to short the market, to be able to do it. It does concern me when I hold these. I lose sleep, so I tend not to be that guy to hold these. The upside, if I was buying TQQQ, I can hold that for a month, and I've held that for a month before and not worried about it. It's the short side that scares me. So understand that's the psychology that most people deal with, is the scariness. I tend to be much more scared on the short side than I do on the long side. Just kind of my thing. I know that I am, but I hold no bravery in my heart whatsoever. So I sold out yesterday. Understand you still have confirmation. You are still up today. You opened up just right now. It's at 9:30. We opened up at 14.84. I sold out at about 14.57 or so, and I bought in at 14.50. I sold at the low point yesterday, but I got a profit. So at that point, I'm okay. And yeah, I was in for $10,000. So it wasn't any, I bought lunch. I think I made like $50, something like that, $20 to $50. It wasn't much at all. We got our December jobs number this morning. Here's the biggest movers, by the way. This is an article that I found on Seeking Alpha. But we're going to look at this article. This is the jobs number. The December jobs growth number unexpectedly climbs. So they revised also October and November. So when we look at this, because the jobs number unexpectedly climbs, jobs number was good for the economy, bad for the market. The rally overdid it in November and December. This is my note that I'm reading. Jobs revision means fewer rate cuts in this year. So the 10-year bond rate went up. We'll look at that in a little bit once I'm done reading this note. This is just unwinding. Understand that the market going down is unwinding the crazy move in December. Maybe if we had just a flat December, we wouldn't have been going back. But this is unwinding exactly what we've done. 10-year bond. There we go. 10-year bond yield. We're at 4.05%. You can see the little tick up there. If we just look at 6 months, you can see we're ticking up. We've gone from this 3.88 up to 4%. What does that do? That brings the market down. If we get up to 4.25, you can expect the market to continue to go down. The 10 years back above 4%. It's no longer being priced. Rate cuts are no longer being priced into the market. The March rate cut, I should say, is no longer being priced into the market. So we've got to undo what we just did in November. And if we look at let's just look at SPY, for instance. We'll just look at SPY, and we go back to where we were in December, the beginning of December. That's 450. So my guess is, and this line right here that I've identified as support before, that's the first line of defense, I think. I don't think we're going to hold here at the 200, at the 50-day. I think we're going back down to this 450. Is that a huge pullback? It's, another 5-6%, another 2-3%, 3%. So I think that's where we're going. So that's just my guess. Again, I'm a douche on the internet. Don't listen to a douche on the internet. But that's my guess, is that we've still got more downside. Am I buying back into SQQQ? Probably not. I think I'm going to probably buy into a short SPY. I will not do it today. I will probably look at some long moves today. I always say this on a Friday, where you have a jobs number that may pull the market down. You don't want to hold short stuff. You don't want to get into new short positions, short-term positions. If you want to trade today, trade it on a short term, scalp 1% out of an SQQQ, which I think you could do. Scalp something like a Boyle or a KOLD. Any of those triple levered ETFs. If you sign up for TrendSpider, I've got this whole levered ETFs to trade. And we can see DRV. This is the short on the real estate bear, 3 times bear. This is up 1.5% today so far. UVIXI is down 2.5%. That means XVIXI, it's up 0.81. It's kind of, SRTY. This is a short, if you think that the Russell isn't going to go down after its greatest month in like 30 years, yeah, look at that. The algorithm got you in at 28. You're at 33 now. This is a fantastic trade on UMDD. This is just the Russell 2000. You're up 10% in 9 days? Yeah. So again, you can look at these short-term ETFs. We talked about TCEL. This is the long one. This is up 1.24% today. It's, it has no confirmation. The algorithm doesn't have you in. That MACD is turning down. The opposite of this is TECS. So TECS and TECL. I said, hey, I do think that TECS comes up and fills this gap up at 12. Am I buying this on a Friday? Hell no, I'm not buying this on a Friday. So let's go back to the newsletter, because I have been posting for the past 2 days, and this goes to kind of a thing. I posted for the past 2 days this Apple chart, and I said if we lost the 200-day support, AAPD is your play if you're worried about Apple. So let's go and look at Apple and AAPD. But AAPD, just so you know, is a short of Apple stock. It's a single levered ETF. The paid newsletters, customers know. I wrote in the paid newsletter, hey, levered ETFs and single stock ETFs. That's a way for 2024. That's probably a theme, because again, we're gonna be in this trading range, and I think we're going up and down. Here's Apple. Look, you got a gap here between 188 and 191. You are at some point going to fill that. At some point, I don't know when, but at some point you will fill that. We lost the 200-day as support. It's kind of hanging around there right now. If you're worried, AAPD is the deal. I mean, if we just look at AAPD, this stands for Apple down, AAPD. It's a 1 times bear, so it's not levered at all. But if you think that, Apple's going down, this is a solid. I mean, look, you're up what? We'll look at an updated one. With the algorithm, you're up. You're just hitting the 200-day, 7%, 18 days. So Apple, when I need to learn, and I need to learn this, when I am trimming Apple in my brokerage account, I may want to look at taking that money and putting it into AAPD as a short term. It's probably not a bad strategy, because when you're at all-time highs and you're hitting that 200 and you trim because the stock just doesn't seem like it can break 200, probably not a bad idea to take that $10,000-$15,000 that I was trimming, put it into AAPD, let it work for me. If it doesn't work, then I take that out of AAPD and put it back in. Just make your stop losses, kind of hold a little bit. So just remember, I said inverse ETFs were a theme. Find your favorite stock, learn from the chart, play the long as a buy, play the hold. You could play this against the 200-day where you just buy. There's a lot of strategies you could play around this, but understand, I do think that for 2024, as part of your strategy, you may want to look at single stocks, learn the stock chart, learn how it moves, learn how it does. I just think, I've been missing the boat on this AAPD thing, but right now Apple is up. So as a Seeking Alpha Premium member, just know, and I wrote this down, I get 5 free articles that I can gift to people. So if you're interested in reading an article and you can't read it, reach out to me. I'm happy to gift you an article. Once I'm done with 5, I'm not buying additional ones. But if you're part of the crew that wants to read, just email me the article that you want to read. I'll gift it to you. So you can read it. If you're not a premium member, I do suggest you become a premium member. It is by far the greatest single site that I can go to for fundamentals. I went over yesterday how to set an alert with SMCI. I will be doing a tool here. This is from TrendSpider, and we're going to go over a couple of charts here from TrendSpider. NASDAQ just closed its 5th red day in a row, its longest losing streak in over a year. And this is a daily chart of QQQ. And this is a much cleaner one. Remember I talk about the MACD. You guys really need to Google the MACD, understand the MACD. My entire portfolio and my entire algorithm is based on MACD. It is, in my opinion, the strongest indicator you can use. Become an expert at it. Understand what the oscillator means. Understand what the strike line means. Understand all of that stuff. I will put all of that in my in the newsletter so you can read about it. I will include some links to some really good YouTube videos. That's how I learn, is YouTube videos on the MACD and things of that sort. But yeah, this is looking like 390s in the realm of possibilities, and that's what they're saying. If we go over to QQQ in in the algorithm, you can see, I mean, look at that volume shelf right there. That's just since we had this death cross right here, October 13th. If I move this shelf, it's probably going to even be bigger. If I move this shelf over to November 1st, you can see the majority of people bought in here. That's going to provide us some support. And that's what this chart is saying. With the volume that they highlighted right there, that's what they're saying on the daily. So understand that that's a great chart. If we go and we look at IWM, which is the Russell 2000, I think it's the Russell 2000. This same thing. I mean, the Wyckoff, you can see the resistance is there, but it means that we might be taking off. This could be, again, this could be the first pullback in a leg. Like they're saying, there's the Wyckoff here. It takes off. Could be a leg. I don't understand Wyckoff. I just bring this stuff up because I see it and I'm like, ooh, that's kind of cool. You can research it if you want. Just don't trust a douche on the internet. Again, even though these charts say stuff, read into it. Understand what it means. This is fear and greed index. You can see this is when extreme greed took over and people started buying. Now you've got extreme fear. And that's what this is saying. Look at this index. Understand the fear and greed index. People are just taking profits and they're scared because it's run so much. Coin insiders. We had $147 million dollars worth of shares from insiders sold over this time. The coin went down 23%. I mean, if we look at coin in the algorithm, crypto is on a bump here, and that's the next article we'll take a look at. But here is coin. We can see the algorithm got us out with a 97% gain. 97% gain. That is huge. The algorithm still doesn't work very well on this stock. This stock is a loser over a long period of time. We can look at a long-term weekly chart of this, and you'll see we're well over the 50-day. The 50-day is about 82. I would expect you to pull back at least to about 112 or so, but remember, we've got a Bitcoin ETF that's potentially coming out. There were just a couple of news stories about it this morning. I haven't really read them. Just understand, wow, you're getting a bounce, it looks like, in the market too today. There's a lot of green in the market right now. But this one right here is the all-time high. You're still 141% away from that. So I do think that you have a significant upside to this. Now, Cathie Wood's been selling a bunch of shares. So have the insiders. So interesting to look at. I just think that it's, you want to take a look at that one for a little bit. Let's see. Bitcoin. We're going to take a look at Bitcoin here. There's another chart on Bitcoin. QQQ. Oh, I didn't put that one in there. I guess, maybe I missed to put it. But I'll find what I wanted. PayPal. They got hit with their second downgrade. And this is an article from Seeking Alpha. Not good. Here's the other thing that I found on PayPal. This is a chart from TrendSpider. That's the 200-day SMA on a daily. And you can see it clearly rejects. This goes back to November 2022. This goes back all the way where it started to slide. And if we look in the algorithm at PayPal, I do own PayPal. At this point, I think every purchase I have of PayPal is in the negative. We had that golden cross right here, still bullish, but it's pulled back significantly since that golden cross. In a downward trend, a golden cross just means that it got back up there. You look at this weekly, and the weekly chart is just really, really bad. It's settling in. If we pull this back to kind of highs to August 2021, you can see there's still a significant amount of people, the majority of people who have bought this stock since September of 2021 are still holding between 70 and 79. That gives it some good upward pressure. Now you can see the Bollinger Bands are cinching up. Where's this stock going? I don't know. Is it undervalued? No. I mean, you can see the PE 17. It's undervalued in the fact that Square, which is a competitor, has a forward PE of 22. I mean, they're doing significantly better. You can see the double top there, but they're doing much, much better than PayPal. PayPal has had no insider stuff. I don't know what to make of it. Their earnings are coming up. It looks like February 5th. That's the first earnings that the new CEO is going to be in charge of. could be an interesting one. I think, again, I'm not getting out of this one just yet, but I am thinking, there's probably better places for my money. So let's take a look right here. QuantumScape skyrocketed after dazzling Volkswagen battery test. This was huge. If you didn't know, QuantumScape was up like 50% yesterday. And for those of you that don't know, I do have a list that I don't publish in TrendSpider. It's called Not Owned. And I don't publish this list because it's with risky stocks that I've traded in the past. QuantumScape is in there. And so you can see on the screen, it's not owned. Now, this one jumped all the way from $6.66 all the way up to late yesterday's high was $9.53. In the afternoon, it got to $10.03. This morning, it is down 6%, just settling in, probably going to cover the gap down. Nothing more than overhyped stuff. I wish I could short this because I do think it's coming back down here to cover these gaps. Those Bollinger Bands are wide open. Do not get into this thinking, oh my God, I'm going to trade this one. I'm going to make a fortune. You're too late. You got to be into this stuff before that news happens. If we look at a weekly on this one, it's a downward trending stock. It's going to settle in probably at that $7.39. You can see any news that this gets, it pops. It just pops and then it comes back down. Look at the volume. Every time there's news, it just pops on volume, but it doesn't last very long. Again, each candle's a week. So you've had your week, then you have your red candle afterwards, after the news. So it doesn't last long. It's one to keep an eye on because their technology is significant. But I like that one. QuantumScape, I would put it into a list that you could watch. Peloton stock. Peloton jumped just on news of TikTok. I wrote my boomer ass needs to get on TikTok. If Peloton's partnership with TikTok can grow imagine what my audience would grow. Now here's the Peloton ratings in Seeking Alpha. Seeking Alpha analyst, sell. Wall Street, hold. Quant, hold. In the industry, it's ranked 14 out of 27. This is leisure product stocks. Right now, JAKK is the top stock in that one. Peloton is one. The only reason to get into Peloton right now is not the TikTok partnership, because I don't think that that's enough of a trajectory for this one to actually start making money. Understand they are losing money. The only reason to get into this is the potential that actually Apple buys them. And if that happens, I think it's a great buy by Apple. I have used Apple Fitness. It is horrific. I think Peloton's app significantly better than Apple Fitness. I think Peloton's instructors significantly better. I think their branding significantly better. I think Peloton's bike could be probably integrated into Apple sales significantly better. I don't think that they have a very good pricing strategy. I don't think that they have a very good strategy as a whole. I think Apple could probably turn that Peloton bike into outsourcing and making sure that, Foxconn makes it, for instance, get margins up. I think it would be a good deal. So the only thing that I think of Peloton is if you want top leisure stocks, you can see Jake's JAKK. Let's look at JAKK. That I don't even know what that is. Jack's Pacific. Look, the quantum's right. The quant from Seeking Alpha is fantastic at identifying these stocks. Look at this one. This one right now at 1678, over 65 days, you're up 110%. Quant just identifies this stuff. Would I buy into this one now? I don't know. Let's take a look at what they say on Seeking Alpha. Everyone's got it as a strong buy. Even the valuation, strong buy. Growth C+, profitability A-. This is just a solid stock. This is from November 18th, strong buy on Seeking Alpha. Let's see where it was trading on November 18th. If we go back to November 18th, it was trading down here, and you listen to this dude's stuff, it was about 28. So if at $28, and you're looking at it now, that's a nice, 22%? So Seeking Alpha would pay for itself right there. I like seeking alpha for these types of things. Amazon snags Disney exec amid streaming push. Don't sleep on this one. Amazon, it's at 145 right now. You've had that button hook. You're out as far as the algorithm goes. The algorithm doesn't have you in, probably won't get you in anytime soon. This is an oversold stock at 28. This one, if we look at a weekly, and I know I've got the top labeled here. If we look at a weekly, you are still well above. Just look, there is a ton of people who have bought here and they're holding at 164. That is an indication that you're going to get it back to that level. Amazon is pretty expensive. Understand they are still, and we went over this last year. Amazon had a cost problem, not a demand problem. So the cost problem is huge. All they have to do is cut costs. Their PE is 75. 20% of internet purchases for the holidays were made on Amazon. Do you need any more indication that Amazon's going to be huge? What about their AI? If you got an Alexa in your house, they're listening to you. They know exactly what you want. Who hasn't been creeped out by Amazon? Every time I get creeped out by Amazon, I buy the stock because it just means that they know exactly everything about me. I got a delivery of soap yesterday. I didn't order soap. They knew I needed it. They put it out there. So I like that one. So don't sleep on this. Add to your Amazon positions. I like Amazon here. It's just on the long term, it's just hovering around that 200 day. And you're going to regret not buying this one long term, I think. Over the long period of time, even if we look at a monthly on this one, it's just pulled back a little bit. Hanging around. When was the last time you had the chance to buy Amazon at the 50 day? It was all the way back here during the housing crisis of 2008. That's the only other time it's dipped down to that 200 day. This entire year of 2022, you could have bought Amazon under that 50 day. I was loading up on Amazon. It's a great one to hold long term. This list of slides from Instagram, I want you to subscribe to the newsletter just so you can get this link. This is just a fantastic list of slides. You got your cheat sheet, U.S. retirement accounts. These are different types of accounts that you want to know which ones you're eligible for. This is the Roth IRA. The contribution is $7,000 in 2024. If you are eligible to do this, you absolutely need to do this. That's a great chart. Index fund cheat sheet. Vanguard. It's a list of 4 Vanguard funds. Fidelity, list of 4 Fidelity funds. Do your research. These are just VOO and chill. That's essentially what this is. Here's your 6 ETFs to build wealth. It's VOO, QQQ, VTI, VXUS, SCHD, VNQ. It's a great list. Again, this is a fantastic list of slides. Here's the sectors with their corresponding stocks. Great list. This is the CMG Venture. This is an account you want to follow. They do a fantastic job on Instagram of just outlining all of these slides. I really, really like this stuff. Low yield, medium yield, high yield, Enbridge, Realty Income, dividend growers, 5 years of dividend growth of over 10%, Starbucks, Home Depot, Broadcom. It's a great list of slides. Again, when in doubt, zoom out. Stock market has seen plenty of major sell-offs over the past 100 years. Look at that. But it's still upward trending. So don't worry about it. That is just an amazing list of slides. I really, really like that list of slides. Let's get to the social request. Ton Lee from Facebook. Yo, douche. I like when people call me a douche. If you have a moment, I was curious. You have your main algorithm on a 4-hour chart. Have you compared how your algorithm would work on the daily chart? If the question is beneficial to others, feel free to share it. So here's what it is. So I'm going to take my favorite stock, Apple. We're back in the negative on Apple. And we're going to run it in the 4-hour, okay? All I would have to do is change this to a daily chart. And it won't, let me see. We're going to test this on the daily. This on the daily, here you go. Over 1,000 candles, it makes you 190% versus 133%. If I go back to 4 hours, let's see. This makes you 32% versus 2.6. The only thing that changes in that analysis is that it changes, just the calculation. So have I looked at it on the daily? Yes. Remember, the algorithm is just moving averages. It's basically indicators and moving averages. It's a combination of when you get in, MACD, when it's bullish, and when you get out. When the moving averages tell you to get out, this has no time constraint. You could absolutely do the algorithm on a daily and test it. When we built this, 4 hours seemed to be better. And the reason 4 hours seemed to be better was it reacts quicker. And what we didn't want to do, we didn't want 5 minute, we didn't want 1 hour, because we wanted to go about our day. Both myself and Steve, we were retired. We didn't want text alerts every other hour. We tried 5-minute charts. We tried doing that. We were getting texts. It was too busy. So 4-hour algorithm gives us texts at 1 o'clock in the afternoon. And it gives us, 12, it might be 12:30, but I think it's 1 o'clock in the afternoon, and it's 4 o'clock in the afternoon. It might be 12:30 and 4. That might be what it is. But it's twice a day, and you get alerts whether you buy or sell. And I've set up those alerts for certain stocks. Apple is one of them. So on this day, if I moved it to daily, it would just give me an alert on a daily. I don't know how it performs, but when I tested it out before, it didn't perform as well. Remember, as you go up, it's going to be reacting slower. So if I were to do a 65-minute, one of the things I provide you in the when you sign up for TrendSpider is a 65-minute algo. And the 65-minute algo is just based on an 8-day EMA. That's it. Plain and simple. Buy under the 8-day EMA, sell over the 8-day EMA. Now, on Apple, over 8 months, you make 12%. If you bought and held over 8 months, you've made 5%. So the algorithm on 65 works. Does it work on a daily? I don't know. But I like to trade on this one. And this one has you out. It doesn't have you in. It's going to get you in very soon. I can tell you, with that MACD crossing up, I think we're looking at an oversold stock here, and I think it's going to move up. So I don't know that the time frame really matters. As far as the return goes, I do back test it and I look at it. I don't look at it as doing better. When we did build this, I haven't gone back recently and looked at it. But if you want to do that at TrendSpider, you can absolutely do that. You just change, and it's easy to build. And if you can see this, I don't think you can see this, but if you're in TrendSpider, down below, there's entry conditions and there's exit conditions. And for this 65-minute algorithm, the entry condition is just enter when the price of the 65-minute closes greater than the previous, than the EMA, the 8-day EMA. And for the exit, price closes less than the EMA 65-minute. And you can change that to the daily and see what it does. So I think I have tested it. If you have TrendSpider, you can test it. I'm not going back and testing it. Took me forever to freaking write that algorithm and to perfect it. It is so simple. We tried everything for it, and I've done enough testing that I trust it. I trust it, with a lot of my stocks. So I just don't think, I'm not in the sense that, hey, I have to go back and I have to, perfect this one. I just like it. It makes it simple. It's part of why I don't do options. I like simple. I like easy. And the 4-hour, I trusted enough. We back tested it over enough candlesticks and enough time that I just trust it. It's not going to time the bottom. It's not going to time the top. If you find an upward moving stock that occasionally pulls back, that's where the algorithm fits. And it just takes emotion out of your trade. It is not optimized whatsoever. It is just something for me that works. It makes me feel comfortable. So, but again, Ton, if you want to sign up for TrendSpider and you can do that, you can absolutely do that. Nice and easy. And that's the benefit of signing up with me, is you get that algorithm, you get those examples, and you hit the ground running. TrendSpider is overwhelming. I got an email from one of the subscribers who said, hey, I'm a little bit, I think I made a mistake in signing up. I said, no, it is overwhelming. You have to put in the work. It is not something where you plug and play. I've been on it for years. I started TrendSpider in 2020. I've been charting for years before that, not as aggressively as I have in TrendSpider, but understand, I have been on this platform for years, so I have tinkered with this algorithm. I am just comfortable with it. I will continue to pay the yearly fee. Well, I don't pay the yearly fee anymore as an affiliate, but I would pay, again, I've gone over this plenty of times. In my mind, the two things that I would pay for, there are three things that I would pay for as a listener of this, but the two things that I personally would pay for is Seeking Alpha and TrendSpider. Between those two things, under $500 a year, I would find absolute 100% value in under $500 for my size portfolio. It's what works for me. Point of this podcast is to find out what works for you. If that works for you, that's a great thing. Again, if you listen to me, the third thing that I would pay for is my newsletter. Just because if you do want to follow me and you want to learn from me, I think those are the three things where you could absolutely enhance your portfolio. So Scott from Facebook, RKLB and RRRX are two of Shea Boular's. You guys know on Twitter, I like Shea Boular. I had on my watch list. They both gapped down. What do I do now? Seems like a small cap could go up significantly on one day, just retracement. Should I wait? I'm not an expert in these. I do trust Shea in that, if they do gap down or gap up, in this case, Rocket Labs, if they gap up, these are, small cap stocks. These are growth. It's not something that you want to get into and think of, if you want to trade them, Scott, my guidance would be, what did you want from these stocks? If you wanted something where it was just, hey, I'm going to buy and I'm going to trade it, sell it. If you've got a profit, look, I took profits in SQQQ. I wanted it bigger, but I'd look at this one and I'd say, hey, the 50-day is starting to move positive, kind of trading around there. I'd put my stop losses in so that you don't gap down. But on the 4-hour on this one, and I know you've got TrendSpider, so the 4-hour on this one, it has you in at 547. You're at 553. Kind of capitulating there. I don't know what his price targets are. Shea is a pretty good, he puts his price targets out there. If he's still holding, I believe in him. And I think Rocket Lab is one that you could probably, if he believes in it, I believe in it. RKLB. This one is an aerospace and defense, $2.6 billion market cap. They are not making money. They have 59 cents per share. They have about 475. They have about 2 years of runway, it looks like. Most of these last year were initiated. The average target price is $7.92. You do have a downward trend here, so you're probably stop up there at about 671 or so. I would say that would be your resistance point. You can see people are selling. Nothing really huge. This was a president and CEO sold on September 11th. Aerospace and defense, dude sells on September 11th, 20,000 shares at 562. Wow. $20 million worth. Whew, that's a big one. Let's look at RXRX. But again, I think Shea, if you're asking me what you do, I don't know what you do because these aren't stocks that I would typically pick. Shea has a significantly different strategy than I do, but I am seeing RXRX. I mean, you're still in as far as the algorithm goes on this one. This one's a solid mover. I mean, if you got in on this one based on Shea in November and you're up 113%, and your MACD is about to cross up again. So I would definitely be still bullish on this one. What you got to worry about is the turn back. So, but again, Scott, what do you do? I don't know. I mean, it's not my cup of tea, not my stocks. I don't know too much about these stocks. My guess is that if you've made money and you're getting nervous, if you lose sleep, remember, part of the rules of the podcast, if you lose sleep over this stuff and you're worried, sell. I was worried yesterday on a 5-minute chart on SQQQ. I sold. Let's see what SQQ is doing right now. We'll look at that one before we go on with the other ones. SQQQ is at 1460. So it's kind of button hooking back. I sold at 1457. Should I have held on and waited a little bit? I was going to sell it today anyway. So again, if you lose sleep, Shea is a guy I know, from following him on Twitter and following him on Savvy Trader. He's got balls of steel. This dude is willing to pour money in. And he's a great investor. And last year, he killed it. Most growth investors killed it last year. How they did in 2022, another story. You've got to be able to sleep at night, and you've got to be able to put up with that crazy, up and down. Amber, love your podcast, learning a ton. Thank you. Wanted to get your thoughts on MDB, MongoDB. Been negative all week and now seeing a ton of insider sales. Would love your take. Let's see. I like MongoDB. It's a database program, software. I like this company overall. I do think it's expensive. We can see it on the algorithm. The algorithm got you out with a 6% loss here. How you had a loss in November and December, I don't know. I don't know why you would get in at that $413 or get out at this 13. I think this is one that you probably want long term. And when we look at a weekly, you kind of just had that golden cross. I don't think it's oh my God, I've got to get into this one, because I think the valuation is a little crazy. Look at that. That MACD is up above the oscillator. The RSI is in no man's land at 49. We can look at some of the fundamentals. MDB here is software infrastructure. They have a $26 billion. I mean, they got enough money. They have $26 per share of cash on hand. They're losing 185. You probably want to be in this when they start making money. You can see the double top right there at 435. You're trading at 364. Average target price 460. Just recently, this week, UBS downgraded them to 410 from a buy to neutral. November, Wells Fargo overweight. They have a $500 price target. So significantly up, from where we are at today. Year to date, so far in the past, 3 days, they're down 10%. Performance over 1 year, 94. This is just pulling back from a great November, December. That's all this is doing. Look for this one to probably hit about this point. I would say this cross right here at 330 might be your absolute bottom. If you are interested in this name, Amber, start adding to it. I continue to think that we are bullish for the long term. So this would be one that I would say, hey, if you're interested in it, I trade it. But I would say long term, you can see these insiders January 3rd, the director, chief revenue officer. I mean, here's January 2nd. They've had a ton of people selling. So that's why you're seeing it being brought down. Are they selling because it's just too high? At 400. I mean, you can see this is just since November. I mean, these dudes are selling a ton of shares since November. Worries me a little bit. What do they know? When's their next earnings date? Let's see. Their next earnings are March. So I don't think they know anything. I think they're just taking the advantage. I mean, if you were holding or you were gifted shares in November of last year or 2 years ago, and you were gifted at 174 and you've doubled that money and you've seen it go up like that, I think these guys are just getting into their profits. I mean, it's not a super old company. Let's look at when they IPO'd. It was back here in 2017. So I think they're just taking profits. I don't think there's anything. I wouldn't look into it. Let's look at Seeking Alpha. MDB on Seeking Alpha. Because I think this one, again, I brought this up before, this company. I think it's in my watch list on TrendSpider. You can see Quant says 3.44. Wall Street says buy. Seeking analysts say hold. The most recent one, December 21st, said sell. Decelerated income rating downgrade. If you're not a Seeking Alpha member, Amber, and you want to read this particular one from Thursday, December 21st, I'll gift it to you. Just message me. They are ranked 13 out of 25 in their industry. Here are the other ones that are ranked. Okta, I've traded before. Wix, I've traded before. GoDaddy, I've traded before. Twilio, I've said I love Twilio. Twilio is one that I really, really like. So MongoDB, I like it. I just don't think that, for long term, I think you play that pullback like you see it now. I like that one. Hari from Spotify, your thoughts on Rivian for 2024? My thoughts are that's a damn nice truck. And I don't know. I'm debating. Cybertruck didn't blow me away. I do have to still go see it in person. It's a little more skimpy on the inside than I would like. And I'm tempted to buy a Rivian over the Cybertruck, but I will wait for the Rivian to integrate NACS charging, which I think is next year, into their trucks. I don't want the adapter. I don't want to carry a freaking adapter. I want the NACS built into the truck. And Rivian, for me, is the next best to Tesla as far when it comes to that. I think it's a $30 stock. It is overvalued, even at its price right now. Right now at 33, I can't tell you what it's going to do in 2024, but I do think when we get that face-ripping rally, I think you see stocks like this just take off. Are they going bankrupt? Absolutely not. This is a company that has enough cash right now. They just did a bond offering. They didn't do more shares. They're still losing money. It is down 16% year to date. Over the last year, it's up 11%. I just think they're not going anywhere. They got enough business to be able to stay around. The problem is this is a capital heavy investment. And that's where you're getting into this. Everybody thought this was going to be the next Tesla. The valuation, I mean, retail just went crazy for this one. And the all-time highs, if we go back and we look at a weekly on this one, since it seems like you want to invest in this long-term, you go back to a weekly, this was $180, $200 stock at its height, 179 way back here in November 2021. And it's just been down ever since. So I think it's a $30 stock. If you want to buy at 19, I don't think it's a crazy thing to buy at 19. If you want to time this pullback and you don't want to listen to the algorithm just made you 23%, got you out. I probably would have gotten out once it started to capitulate up here at 23, but it got you out around 20. It's at 19 now. Do I think it's coming back down here to 16? Probably. I mean, if we just look, you did not have enough volume. We're going to pull this back to when it was trading back in October 2023. This was trading at 25. It topped out here at 25 twice. So we're just going back to, I can even pull it back here. We're going to pull it back to September 2023. This is where it was trading right around that top where it got to and then got rejected. So 25 definitely seems to be a place where it's hiding. Well, when we look at these volume levels, we're going to pull this back. Where are the majority of people holding? They're holding down here at 16. It's going to get pulled back down to 16. These people are going to start selling as it gets there. This is going to shrink down, and that's going to mean these people who are still holding up here are either going to sell for a loss or they're going to hold until it gets back up there. And so if we even pull this volume back further, let's just go back to where it popped over here at the $30, closer to 27, which was July. Nobody's holding up here. Nobody's holding above this $25 range. There's very few people that have bought and have held in there, but the majority of people are still down here. So I think you're coming down just based on volume. I think you're coming down to this 16 level. So I would play this in a range, and the range that I would play this in is probably down here at 16, and I'd probably sell, to be honest with you, anytime you get over 20. But I do think that at some point in time, it's a $30 stock. There's my thoughts, Harry. It's just overvalued. It's a capital-intensive business. I don't think they're going to dilute shareholders, but that's a tough hill to climb. Paycom, Steph from YouTube wants me to look at Paycom. We looked at this a little bit. The chart is crazy. You've had a couple of gaps down here based on earnings. The first gap back here in August when they reported earnings. This was a gap from 365 down to 333. And then you go sliding down to the next earnings where you're now trading at 244. And you gap down again from 244 down to 157. You're trading at 200 today. Excuse me. The algorithm gets you out with a 15% gain. So it does not have you in right now. And I'm going to pull this volume shelf over here to where we started gapping down, right on the earnings there on August 1st. We're going to look, where are the majority of people holding? They're holding down here at 146 to 162. Okay. You've got a volume shelf kind of building around between 173 and 200. This 200 to 235, nobody's holding. There is nobody in this range because you gap down. So there's nobody holding in this range. So to get above this, they've got to start building some volume. And right now they don't have volume. That MACD is crossing down. The RSI is at 48. I don't think it's a horrible thing. If you want to take a look at this for the next earnings on February 6th, that's the big question, is what do they do on February 6th that's going to bring it back up? You can see we're in a downward trend with that 50-day on the long term. The 200-day is starting to turn negative. We've rejected that 200-day a couple of times here, back in January of 2023 and August of 2023. So I don't know much about this one. Let's look at some. I think they're losing money if we looked at it on FinViz correctly. No, they're actually making money, but their PE is high. I mean, let's look at ADP, which is the other staffing company, I guess, 27, and Paycom is 33. That's a little bit expensive. What are they providing that's giving them the growth to 33? They have a 0.05% dividend. They were down over the past year 34%. Year to date, they're down 4%. Average target price is 196, and you're trading at 198. Most recent, today, Jefferies downgraded them to 195. November 7th, UBS said, hey, we're positive on this one. It's 235. November, Bank of America said, hey, we're down them to 185. So obviously analysts are pulling this one down. Let's go over here and let's look at Paycom, PAYC, over in Seeking Alpha. Quant says strong sell. I trust that quant. I mean, again, this Q3 sell-off was justified. This guy on December 8th said, hey, buy. Let's look at where it was December 8th versus now. We'll go December here. December 11th, we were trading at between, looks like the high was 207, the low was 186. So this dude said, hey, it was justified, and he's buying. He hasn't made any money. He hasn't made any money since then. These guys say hold. Right now, it's 32 out of 35 in the ranking. So the top one is Upwork. I would probably look at Upwork before I'd look at Paycom. Fiverr is another one in this one. Paychex, Payayx, I've traded before. There's a great list here of some of these ones if you want to take a look at them. But I'd probably stay away and not necessarily think that, hey, I'm going to get a bargain in this one. There's something wrong. Those Bollinger Bands are wide open. You're still trading in the middle of these Bollinger Bands and in a downward trend. I'd probably stay out of it. I think there's better places for your money. Scans, energy sector, BTU. This is Peabody Energy. This is coal. I mean, it's just, I'm not a big fan. They sell their coal basically to China. China's in need of a huge amount of coal. China's, that's who's this main customer, I think, of Peabody. It's okay. It's trading up there at high. You're not going to get a ton on this one. BITO. This is the Bitcoin shares that ARK is trading. I have not traded into this. It's trading at 21.26. We're just seeing the MACD. Again, remember my algorithm. Every scan that I do is based on the algorithm. And right here, you're just seeing it kind of fluctuate. You had this great MACD run. The RSI is just kind of hanging out in no man's land. The MACD crossed up again. So it might be another second leg that you could get into BITO. One moment, I probably need to sneeze. Oof. But PDD. Okay, I didn't sneeze. PDD, Pinduoduo, China. I'm not crazy about it, but it's in NASDAQ 100. This is one, if you want to get into it, I think Pinduoduo actually owns Temu. Another one with crypto, GBTC, another MACD cross up. GBTC on the algo is 80% up. You're even higher than that right now. Maybe another leg. Look at that divergence where you're going down in the MACD, but you're going up in the price of the stock. So divergence, just, different directions. QuantumScape, we talked about QuantumScape in the algorithm, has a buy. I would probably stay away just because you've seen it. Buy at 935. It is going to lose you money. The algorithm loses you 59% versus losing 58%. Buy and hold. I don't think that this one's worth it, but it is in my list, so I figured I'd put it in there. And finally, Medtronic. MDT. These are the guys that do the ventilators during the COVID stuff. They got a huge bump up. They have been not loved since, but they're getting some love now in the algorithm. 72 was the buy on November 13th. You're up 18%. Anything in the healthcare sector has just been flying through this November, December timeframe. Here's the reason why. It was so beaten down. Now, their earnings kind of justified the beatdown as they slid down a little bit. Doesn't justify that big of a one. It's just beaten up. So do I think you get in now? I don't know. I mean, PE's 27. It's back up there. Average target price is 90. You're trading at 84. Not a huge thing. I think that average target price is probably where you're going to hang out. So remember, this weekend I'll be doing a paid newsletter. And it will be about these things and divergence. I will put divergence in there as well. If you have any questions, you can hit me up on any of the socials. Remember, TrendSpider special offer. This is the best offer that you'll get. I think the $400 is over. I will have another special offer if you're waiting to get in. Seeking Alpha, you get $50 off if you click that. Webull, I can't tell you how much I love this app. Get into Webull, put $1,000 in there, $500, do whatever you want. Put $100 in there. Get some free stocks. That's what I did. You get some free stocks when you sign up. The newsletter, that's the link down there. If you're paying anything more than $20 per month, $25 per month for your phone service, you should probably switch over. There's no long-term contract, nothing. You can get it for $20 a month for the first 24 months. Any of the socials, you can hit me up there. I will see you guys Monday. Have a great weekend. And for the paid customers, again, send me messages. Talk to you later. Bye.
The trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.